Good morning and welcome to SFI Live, our first ever LinkedIn Live broadcast. I'm Jay Evans, your host. You probably know me if you've seen SFI Live before. Slight change of direction in that I'm going to be interviewing someone to start this webinar off, somebody who's got a case study self-employed mortgage. As you're all probably aware, this is all about self-employed today. 1 hour talking about self-employed, and we'll bring on the rest of the guests a little bit later. But first, I'm going to introduce you to our special guest. Bear with me. Ladies and gentlemen, please be introduced to Kelly Sjöberg. Kelly, thank you for joining us. Maybe just before me and you break into conversation, a little introduction to who you are and where you work and what you do.
Yeah, so I am Kelly Sjöberg. I've been a mortgage advisor for the last 15 years and I work for Smart Advice Financial Solutions, and we're appointed representatives of the Mortgage Advice Bureau.
There we go. Thanks, Kelly. Okay, so Kelly's with us for a reason, actually, because we're here to talk about self-employed mortgages. And Kelly, you had a particularly difficult case pretty recently. And I know you've been sort of discussing this case with Saffron. And just for fairness to the audience, it was eventually put through Saffron. So we'll get to that bit in a minute. But maybe to start us off, just tell us a little bit about the case, what the sort of complications of it were, and then we can get a bit of a snapshot of what we were dealing with.
Yeah, absolutely. So it was actually a friend of mine who had moved back from South Africa. She was a British national, but been living abroad for 10, 15 years. And she'd been self-employed, owned her own company in South Africa, moved back to the UK. And obviously where she was living in the UK, she was then limited on UK address history, as well as things like the self-employed accounts, because she had to then become self-employed in England, which was obviously different set of accounts as to what she'd been doing in South Africa, etc. So she would only been classed as being self-employed for 2 years in England, with the first year being a startup year and a move year.
Wow, so there was going to be, you can see the difference in there. So there was lots of elements in there, wasn't there? Not just the fact that she was sort of switching accounts to the UK business, but I suppose that nobody was taking into account the previous business, so she was starting from scratch. How long was she in the country before you attempted to get a mortgage for her?
So I spoke to her originally, and she'd moved, obviously, schools, etc. So within the first year where she moved, and I kind of spoke to her and said, look, what you need to be doing is getting yourself on the electoral roll, get yourself a bank account and get some credit history, and get yourself at least 2 years accounts, really. And so that's what she's looked at doing. Obviously, her first year when she moved over as well, it was during COVID. So the first year's accounts were lower, as well as being a startup year and her daughter starting school. So it wasn't just necessarily about finding a lender that would take 2 years accounts, but also looking at lenders that are going to take the latest year's accounts, opposed to averaging out for affordability purposes as well.
So that was a typical everyday mortgage is not going to be a mortgage you need to get on that one, that's for sure. Tell me a little bit something else we discussed actually before we came live the other day. We were discussing the fact that her credit rating as well, because she'd been out of the country. She hadn't really built up a decent credit rating either.
Exactly. It wasn't necessarily bad credit. It was just lack of credit. So where she hadn't had bank accounts and hadn't had credit cards and hadn't been on the electoral roll, she just wasn't really traceable. So it was just her credit score or credit history wasn't there either.
Okay. So you've got this case, you knew it's going to be complicated. How many, without mentioning the lenders, but how many lenders did you approach? What sort of feedback did you get from lenders as soon as you put it forward? What was the process like? Obviously, don't mention the lenders themselves.
Obviously, absolutely. So first of all, you've got kind of 50% of lenders that are going to need 3 years worth of accounts anyway. So you kind of don't even start with those ones. So it's looking at the lenders that will take 2 years or less as accounts, and then going through who's going to maximize the affordability, which majority of them are going to average those 2 years out. So that again wiped out quite a lot of the lenders. So it was then looking maybe a handful. I did approach one other lender and put an application in before putting one onto Saffron, and it became kind of really hard work to kind of justify how long she'd been living in the country, because the first 6 months where she was in the country, she hadn't necessarily had the bank accounts and the address history, because her priority was moving over, and it was COVID. So there was a lack of ability to be able to go to the shops and just change your address in the bank, etc. So we were looking at another lender. They then decided that they would lend, but not for another 6 months to a year, and they wanted more accounts before they would lend, etc. And it just became quite difficult. And I think they were even looking at her LinkedIn and her Facebook to say, well, she hasn't been here because she wasn't registered here. And I think the issue that they had was that she worked internationally, because she's that's what she does, and she works for a lot of different universities around the world, doing proofreading, etc. And some of her clients were paying her in their foreign currency, even though it was coming into HSBC as into a bank account as a Great British pounds. There was foreign currencies being invoiced, so they also had an issue with that. So we had various different parts of the application that were causing us a bit of a headache, really.
So I think we've identified you needed a specialist self-employed mortgage. I think that's pretty much evident.
Yeah.
So tell me how working with Saffron came about. How did you manage to get the case to them and get it considered?
So coincidentally, I'd booked in Lee to do some of training with our advisors from Saffron Building Society. So he was hosting a session with us to kind of go through criteria, and he mentioned self-employed product and of the fact that you only need 1 year's accounts. We actually had 2, but if you, in that scenario, they will take the latest year's accounts, which is what we were looking for. So I spoke to him about the rest of the case and the address history, etc., and everything was seeming to fit. So it worked really well, actually, timing wise, that Lee did that training, because I had the perfect case to pass over to him. And yeah, as you know, we then placed it with Saffron.
So she's in her home?
She is, yep. She's all moved in.
Just make sure we can actually get there in the end.
Yeah, absolutely. And to be honest, it was tight deadlines, because although she wasn't buying a new build, the people she was buying from were buying a new build as well. So we then had a pressure of a 28-day exchange. And I think we managed to just about do it. They needed, the house builder wanted that house particularly sold for the end of the tax year. So I think they moved in on the 5th of April. It all completed. So everybody was happy in the end, which was great.
Sounds good. I deliberately did this interview because I knew you worked with Lee, so I did this interview just me and you. So thank you for that. And it just kind of it's really nice to have that snapshot, almost a case study, if you like, just to show that no matter how complicated it is, if you work with the lenders and the lenders work with you, there's a good way of putting these cases forward. So I think that's a good chance for us to bring the other guys on. So for the sake of the viewers, Kelly's going to stay with us and chip in where she can, because we're going to be talking about all things self-employed, getting cases through, some of the big mistakes that we're making when we're putting cases in, how to have more success. And also, Saffron's going to be talking about some research they've done with self-employed people who want to get a mortgage. So that could be quite interesting. So if you just bear with me, I'll introduce the guys on. And here they are. Good morning, guys. How are you doing?
Morning.
Oh, good. Thank you.
Little introduction, Tony, please.
Yeah, morning, everybody. My name is Tony Hall. I am Head of Business Development here at Saffron for Intermediaries. My role, as I always say, is to make sure that intermediaries get everything they want and need from us.
There we go, short but sweet. And Lee, welcome to SFI Live. This is your first one, isn't it?
It is indeed. It is my debut.
Well. So you definitely need to give the guys an introduction on who you are and what you do at Saffron.
Brilliant. Thank you. So I'm Lee Williams, Business Development Manager at Saffron. I look after the Southwest and South Wales, and just keen to work with broker partners to make it as easy as possible to maximise the opportunities that our proposition gives them to help their customers.
So just to pull that point out, you're a regional BDM. So what does that mean for the brokers that we've got in the audience? So you look after a certain patch. How many of you are there? Give us a little bit of an insight.
So there's 4 in the team that are field based. We then have telephone BDMs that work with us as well. So we've got a large team. I think it's 12 of us in total that are keen to support the broker partners.
14.
And just 14. I wasn't counting myself in that, obviously, or one of the others. 14.
Because I'm no use to anybody.
I didn't want to say anything, but may move on.
There we go. Right, so as we've done Kelly's interview, we'll go on to the actual crux of the webinar now. So for the audience, you can comment. If you're watching us on LinkedIn now, you can comment on LinkedIn and we will see it here. So we are very keen to hear your thoughts and see your questions. I'm sure questions will come up as we go through. As I mentioned before, we are here to talk about self-employed mortgages, where one size does not fit all. So Tony, just before we sort of crack on with a few questions and talk about cases and how to get them through, you guys have just done some research and actually built an entire campaign around this. Self-employed has always been something that Saffron really supports, isn't it? So this must be really important to you to get this message out to the brokers.
Absolutely, yeah. Self-employed is we're absolutely passionate about supporting self-employed customers and the brokers that support them. You know, I think we'll come on to the stats in a bit. There's a lot of myths around self-employed, purely from the self-employed themselves, thinking they can't get a mortgage or it's going to cost too much or whatever. And you know, our job is to kind of blow those myths away and help the brokers support their clients to further embed that there is a mortgage out there for pretty much everybody.
Kelly, did you feel that with your case? Just to come to you almost straight away, but with your case, did you feel that there wasn't a lot of options out there, or you didn't know there was many options out there, or did you feel, okay, let's just look around and see what we can find?
I think self-employed has always been difficult when it comes to mortgages, and COVID didn't make it any easier because majority of lenders have restricted lending specifically on self-employed. I know, for example, we helped with a launch of a new bank last year, and one of the things they were trying to explain to our brokers is that they weren't going to lend to self-employed because of this risk and this risk. And funnily enough, most of our brokers are self-employed. I'm self-employed. And actually, our business model works very well for self-employed because we've got, the majority of us have got quite a lot of children, as you can probably see behind me. So we work flexible hours and we work hard because if we don't make any money. So we enjoy our jobs, and this bank, we're trying to explain to 45 different brokers why they weren't going to launch self-employed. And we were all sat there self-employed saying, why not? What's wrong with our income? Why is our income not as good as somebody that sat there working for the boss? It's So no, there's definitely, it's hard being self-employed. So things like what Saffron are doing is very refreshing for brokers because it's making that step easier for the self-employed. And there is a lot of people that are still self-employed. So it's an area that needs to be looked after.
It was a big jump in the pandemic. I mean, I'm testament to that case study here. I went self-employed during the pandemic because I said, actually, I reevaluated my life and went, I could do better and I could do more and do less work for more money and actually a better working life, and I could be employed. So, you know, I'm same as you. I jumped ship, and yeah, it is complicated across all credit, not just mortgages, but I wouldn't go back now. So does that sound like I'm forever going to be self-employed? Yeah. So let's talk about this research. So Saffron, just for the sake of the audience, Saffron surveyed 1,000 self-employed Brits to find out their opinions on getting a mortgage, finding a mortgage, how they go through, all that kind of thing. And so we're going to use some of those stats as we go through. We might reference back to them, but this is really educational. So we really do want your questions. So if you comment on LinkedIn underneath the video, they will come up. They will even appear on the screen, I'm told. So they will come through to us. So please do pop them in and we'll get to those. But in the meantime, I want to pick on the first couple of stats, Tony Lee, on the actual prevalence of the mortgage. And I think we need to just caveat this research a little bit in that we don't know if these self-employed people have ever worked with a broker. So we have to bear that in mind. I think because the stats can be quite devastating from a broker perspective, but this isn't to slate the brokers. This is just a survey to everyday people at home. So please don't take any offense to the stats we're reading out. This is just what we found from a consumer perspective. So nearly half felt they wouldn't find a suitable mortgage lender for their individual needs. And 1 in 5, only 1 in 5, should I say, believe there's a good choice of products in the market for them. So clearly, as you were saying, Tony, earlier, that I think the actual borrower themselves isn't necessarily aware of it, but I think if anything, it probably shows they didn't go to a broker in the first place. But that is an issue for us, isn't it? The general consumer, the general self-employed worker, perhaps isn't aware of what options are out there for them.
Yeah, exactly. It's funny actually. Of all places, whenever I go to my barber's, I always get chatting because he's a mate of mine. He has been for 40 odd years, and he always says, "Oh, if you need a mortgage, come speak to Tone." You know, so I always get loads of people talking to me, and then one guy was like, "Well, I'm self-employed. I'm in my 50s. I'm not going to get a mortgage." And it's like, "Yeah, you will." But your first thing is you need to go and get the right advice. You know, have you got a broker? No, I've never used one. So that's the key. It's go and find a broker because they will open up that universe to you. But I think what the research kind of taught us was how clear are we in our messaging on our websites, in our advertising, that we are here to support the self-employed? So I suppose looking down the lens at the brokers saying, what does your website say about you when you are talking self-employed? Does it make it easy? Does it make it obvious that I'm the person you should come and talk to because I can help you? All right. It might not always be the positive conversation that you need because you might not be in the right circumstances, but at least, you know, knowledge is power. If you understand, you can then deal. And I think that's the key for my message is as lenders and as brokers. What are we saying on the opportunities that we have to say we can support this market?
That's a very fair point, Lee. I think I'm just coming to you because you work with brokers day to day. It's a very fair point. There are some brokers out there that I know are self-employed friendly, and you can Google them and you find them. But I think Tony has a very valid point here. It's for the brokers. Obviously, the brokers are our audience. They need to make themselves known and let these consumers that we've managed to survey these 1,000 people. They need to know that the brokers are there for them as much as the lenders, don't they?
Oh, absolutely. I mean, you know, customers will be. I use my wife as an example. She will look on a website, she'll look for reviews before she's willing to do anything. And if that website and those reviews do not show either a good volume of reviews or detail in the reviews, and, you know, I think that from a self-employed point of view, self-employed customers do feel that they are a niche, they are a specialism. And actually, there'd be a lot of brokers that might just feel that it's something that they do in, day out and don't need to shout about it. The problem is actually those customers do actually feel not as valued. If they can see that they are an area that broker is going to look after, then they are more likely to then do the click of making an introduction, you know, and when you're looking at analytics, if you've got loads of customers coming on and ultimately not then getting in touch with you, then that kind of tells you from your website point of view that it's not inviting them enough to actually feel like they're at the right place to sort out their mortgage. And self-employed is definitely key in that.
Sorry.
No, sorry.
So Kelly, you were an advisor for a very long time. I know your job's sort of mixed job you've got now, but in all your years, has self-employed been a prominent part of your career? Have you ever seen a lot of applications come through over the years? Has it got easier, harder?
Yeah, I would say, like Lee said, it's just part of our job. It's not necessarily something that I specialise in. If I was to say I specialise in something, it would probably be more so specialist buy to let. But self-employed is part of we see a lot of it. You'll be, I think, surprised how many people are self-employed. And I do think the self-employed are more likely to ask a broker, because I don't think it's just a minefield, isn't it? Every single lender's different. Some are taking net profits, some will take director's salary, some are taking, it all depends on what accounts they want, etc. I think you need that broker's help. So we see quite a lot of self-employed come through, yeah.
So Lee, let's talk about product for a minute, because we have a specialist self-employed product. I know we've changed criteria in using self-employed across the board, but let's just talk about the specific product for now, because Kelly just mentioned a certain criteria. You've done quite a lot of changes recently. I'm coming to you because I always feel like I'm tripping Tony up when I come to him.
Don't come to me.
Maybe give us a little bit of detail on the product, the self-employed specific product for now. We'll talk about the others in a minute, but and how that benefits the brokers that are in the audience. What makes you different?
Yeah, okay. I suppose that the key points of our self-employed product is all around two key points, really. One, limited trading. So we need minimum of 1 year's trading. So for those that haven't been trading for very long, our specialist product is there to support. And then we've then got those that need that extra flexible underwriting. So a bit like what Kelly was saying in terms of they've got that massive uplift in income, you know, whether it be that they've had one-off costs that we need to also consider. We're a lender that loves a story, you know, so this product allows us to use the expertise of our underwriters and actually underwrite on an individual flexible basis. Yes, we've got a policy framework, but ultimately what that does is it gives us that flexibility with this product to look at the circumstances and look at the story. So, you know, there's a number of ways that this product would help the self-employed. It doesn't have to be just from a limited trading point of view. It could be that we actually just need a more flexible approach to the underwriting. And that's really what this product is about. And so many customers need it. You know, I speak to brokers where they don't want to talk about the self-employed product initially, haven't even looked at it. they think they're quite mainstream, find out loads, and actually the self-employed product is the route that we've ended up going down, because actually it hasn't been as straightforward. And obviously the research has shown that actually customers want brokers that actually will get to know them and their business, and we're a lender with this product that actually wants to get to know them and their business as well.
It's all about relationships, isn't it? And Tony, you've trained him well. He basically used your line of tell the story. But we've been saying this for what, 3 years? I think pretty much we've been saying it for 3 years.
Yeah.
So let's just pick up on a few sort of things on what that means. So let's put it that way. So what does that actually mean? What do you need from the broker and essentially from their borrower? What do you need from them? What tells that story, and what do you commonly see get missed?
I think one of the key things we see, and again, I will revert to Lee, or Lee can just shake or nod depending on how I'm doing. The key thing is about actually reverting back a little bit. One of the things that the survey told us was there was a concern that brokers didn't understand the makeup of the business and the accounts and how to interpret them. And that is one of our main issues that we find, is that the brokers are incorrectly calculating income by looking at the accounts. They're either looking at using too little or too much. Sadly, most of the time it's too much, and we have to disappoint and say, look, your applicant is not 100% shareholder, he's 50. We can't take all the money because his other shareholder might have a bit of a problem with that. So I think that's one of the key things. It's about understanding the accounts, and then not disappointing anybody by putting in the right figure into the box. I think that's one of probably the key areas for us. But I could go on, but I think the key, back to what Lee said, is about, look, our underwriters are good, our BDMs are good, but they are not mind readers. Thank God, because I'd be in trouble if they were. But the key is to tell us that story. And Lee actually was talking to me the other day about how he positions this with his brokers, and I think this is a really top tip for everybody, is tell us that story. So we have a notes function on our portal where you can tell us all those juicy bits. Why should we use this part of the income? Why should we use that? Why we should ignore this? Why should we do this? And Lee said the best way of a broker explaining this to us is 3 bullet points: past, present, and future. And I really listened to that, and I've used it already with people that tell us why the business has been successful in the past. Tell us what it's doing now and how that's continued. And if you are looking for something that's for the future or sustainability, tell us why it's going to continue. Because the underwriter's then going, oh, I get it. Okay, no brainer. If you don't provide that information, I guarantee you will be coming back for more questions, or in some cases, it will just be a decline. So that's the key when we say tell us the story. And if you use Lee's 3 bullets there, and we don't want war and peace, but enough for the underwriter to go, oh, I get it. Or if they don't get it, they will pick up the phone and ring you, because that's one thing our underwriters will do now. They'll go, got this, not sure, talk me through it. Great. Okay. So I think that's probably the key. There are more. I've spoken for too long, so I'll let Lee pick up a few of the other bits.
I think the other key thing is that how we use the projections, in all honesty. So that can be a key area. So just to be really clear, obviously I know every lender is very different in terms of how we use a projection. So we use a projection really to get an understanding of what the income's going to be moving forward, to get a comfortable with the income that we're trying to use. So we're not using that income. What we're doing is trying to use that to feel an element of comfort. So if we're using the most recent and a projection shows it at that same level, then again, it's just that comfort level. Again, if we've got one-off costs and we're trying to disregard a year, again, we're using a projection to try and feel comfortable it's returned to that level. So that's where the projections can be really, really useful. And I always say that when you're looking at self-employed, bank statements are absolutely key. Now, with us, we've just made the change that we don't actually ask for business bank statements as standard, because we're leaning on the accountant to understand as a projection what that income is going to be moving forward, rather than looking at the bank statements. And when I look at the cases that we're dealing with, a lot of the time that's a big selling reason for using us, because actually the bank statements, nearly every self-employed customer, you know, my dad's self-employed. He gets really frustrated when I talk about mortgages. He's a builder. He goes off on one. The minute that I say to him that income sustainability, you know, needs to be level and that's no, there isn't many businesses where it's possible to be that consistent. So, you know, from a projection point of view, they're looking at it in a much more bigger picture. So that's where we can get that comfort. And I think that makes a massive difference.
How easy
Don't
is
get
that
me
for
wrong,
you,
other
Kelly?
lenders
Sorry.
will use that projection. Sorry.
I was going to say, on the case that I did with Saffron, obviously it was before that criteria change that you didn't need the bank statements. And actually, me and Lee spoke the case through before I submitted the application, and Lee did give me the same advice to make sure I wrote a story. And actually, part of my client's bank statements, there was a gap in their income during the November period because being self-employed, she doesn't get paid sick leave, and she'd had to have time off for surgery because she had some eye cancer. So she'd had time off work. Had no pay during that period of time. So there was a 3-4 week gap where there was no income. And it was just making sure we explained that to the underwriter. Luckily, she's also had December, January, February at the time that was full income. So she's back to work and showing it's back to normal. But it was just making sure we wrote that story and gave them that information at the point of application. So they didn't have to look at the bank statements and come back and say, what's gone on here?
I think, Lee, you picked up on something, and it'll be in the frequently asked questions, which is going to be a quick fire quiz for you later, Lee. So prepare yourself. Don't worry, I'm not going to trip you up. Not going to trip you up. But it's just you did mention it. It has to be accountant projections. Just explain what the difference might be, what you may have received if it wasn't from an accountant.
So, I mean, you know, obviously we've had times where they've been sole traders, and the first question I'll get asked is, you know, they don't have an accountant or they have a bookkeeper. That we do need them to be suitable. We've got a long list of all the accountants that we can accept in terms of the bodies that they're part of. So we do need them to be a suitably qualified accountant rather than bookkeeper to basically give us that level of understanding in terms of the business, but also feel comfortable with the projection they're giving. And obviously by being part of those bodies, we can get that comfort. So we do sometimes get that where an accountant certificate's been completed by the wrong person. That obviously has a bit of an impact. We're quite clear on who we need it from and why. Great.
And you just brought up sole trader, Lily. Sorry to put you on the spot again, mate.
Yep, fine.
You mentioned sole trader. If someone was sole trader to limited company, is there a lag in the changeover? So is there any restrictions in that?
No, not at all. I mean, you know, we want to get to know, again, what's happened with that change. So we want to know the business and get to know what's happened there. So if it's gone from sole trader to limited company and it's purely just a different wrapper on the business. So same ownership, 100% that customer still, there's no change in the business operations, then we're happy. We don't even have a minimum amount of time that they need to be a limited company for. When there's big changes as part of that, then I would just say speak to your Saffron BDM, because we want to get to know what those changes are and what they've actually meant for the business and what's it going to be moving forward.
Tony, it's on the spot time for you now. You did quite a lot of updates earlier this month. Was it earlier this month or end of last month? Quite a few updates, which included more support for the self-employed across the product range. Maybe we could have a little conversation about what's changed, what the brokers might not know yet. They might not have seen the articles in the trade press. What was the sort of big moves and shakes of recent times?
The big one for us was we used to Lee's talked about our specialist product, which was 1 year's trading with a projection, which we've talked about, and then it used to be 1 or 2 years on that, and then if it was 3 years, you went on to our standard product range. We've cut out that 3rd year, so it's now 1 year specialist, 2 years or more, you go on to our standard range, which is obviously a cheaper price because we're pricing for that risk of taking an educated gamble on a 1 year trading position. So that's the biggest thing. But what that also helps us with is first time buyers and also self builders, because in the past we used to say we want 3 years in self-employment as well in those categories. So that's one of the big wins for us. It's not groundbreaking in the market because quite frankly, we're just playing catch up, but it now doesn't remove us from that conversation going forwards with the BDMs, so that's probably the top bit. Another one from the self-employed perspective is around CIS workers. Okay, so again, I'll do my best, but Lee will either shake or nod as I go through this. So the thing that makes Saffron different is we treat CIS workers as though they're almost employed. So we don't treat them as self-employed and looking for SA 302s or accounts. We just want to see their invoices and bank statements. And we used to ask for 6 months of each. We've just moved to 3 months of each. So our proviso is 3 months CIS experience with at least 12 months industry experience in the industry that they're contracting in. So that's a real change for us. But we treat these guys almost like PAYE rather than self-employed, which is a big plus. Lee, have I got that right?
Yeah.
Oh,
spot on
for that.
Yeah.
Spot on. Gosh, that's kind of drained me of energy of what else we've done. What else have we changed? Because there's an awful lot. What were the other key things we did, Lee?
If I just jump in, I didn't mean to interrupt then.
No, please do, because I'm just padding.
Just do that. So the 2 years makes a big difference for how we can help through our other ranges as well. So, for example, if you're doing a joint borrower sole proprietor for first-time buyers, the first-time buyer now previously would have needed 3 years experience. Now we only need 2. Same thing for self-build, where previously we needed them to be self-employed for 3 years. Now we only need 2. So it's opened up those areas where we were previously needing more self-employed experience, arguably been unfair, really, in the sense that actually, those 2 years which we're now comfortable with now means that we're able to help those customers. So I think that's what the 2 years has really made a big difference for as well. So it's not purely just to be more specialist, actually it's to help in those other areas.
Yeah, there is there's a load of other changes that are more broader than the self-employed, but very quickly I'll just run through a couple because they're all relevant. So we used to limit to 20 acres. We can now consider more than 20 acres of land, provided it's not commercially farmed or someone's running a business from it. So that's a new one for us. And the most exciting thing for us, which again does link to self-employed because we get a lot of self-employed self-builders, is that we've really modernized our approach. We've always been good at modern methods of construction, but we've gone uber good now, in my view. So we're comfortable with things like 100% cladding. We're comfortable with, most modern methods of construction, provided they have the right accreditation behind them. And that was a slight limiter for us. We've also really opened the doors on custom build as well. So there's a whole load of stuff more that you speak to BDM or the intermediate support team. They can tell you all about our criteria. But I think those are probably the key things that I wanted to get across whilst getting the opportunity to talk to everybody.
Kelly, just coming to you before we lose you, because I know we're going to be dropping you off in a second, but I just wanted to come to you really quickly because am I right in saying you used to be quite buy-to-let heavy?
Yeah, absolutely.
In your advisor life. So there must have been a fair few self-employed buy-to-let applications come through there. How was that process?
Yeah, professional landlords, etc. as well. It's, to be honest, buy-to-let market is particularly easier potentially for the self-employed because a lot of the time they're not really looking at their income, they're looking at the rental income. So actually residential self-employed is probably a tougher gig than I would say the buy-to-let self-employed is.
It's a good bit to know. Kelly, I realise we're going to talk a lot about Saffron's products, so we're going to let you go. But can I just say a massive thank you, first of all, for joining us and telling about your case as well. And, congratulations to both of you for getting it sorted. But just as a last word, you obviously had to tell quite a story to Lee. How did you find the process? Did you find it was clunky? Did you think it was quite quick? Do you think it was to the point where if you were a new broker, would it be daunting or did you get sort of handheld all the way? Maybe just a little insight into the process.
Yeah, so the process itself was pretty, I would say, up there with the high street lenders process. So you're not any different in terms of the application is just as easy, similar to other lenders, etc. And having Lee's support, and obviously I know there was times where we were having delays, etc., especially with the pressure from the estate agents on the new build, where I'd be calling up Lee and Lee would be doing what he can to really escalate it. And I think I was looking at the timescales. I think it actually offered We instructed the vow on the 21st of March. It offered on the 28th of March, and she moved into a house, like I said, on the 5th of April. So it was literally within a week or so before she completed, because obviously we had that delay at the beginning with Precise and the other lenders, etc. So it was a really good experience. And I know that one of the things that Lee and I discussed during the process was the service levels on the website weren't quite showing correctly. And through me feeding that back to Lee, that's been changed and updated to make it clearer for brokers on how long we've got to wait for the next stage, etc. So that was really good.
See, it's all about relationships. It's all about relationships. It's the advisor down to the borrower, having that relationship and that honesty. And obviously, Lee, you've done a cracking job. I'm going to pat you on the back.
Thanks for reading the script I sent you, Kelly.
Kelly, thank you so much for joining us. Really, I know how busy you are, so I really appreciate you taking the time out and joining us and giving us a snapshot into a recent complicated case. That was really helpful. So thank you, and we'll see you again soon. Maybe you'll join us again, or join us on the podcast for sure.
Yeah, that'd be awesome, Kelly. Thank you.
Thank you so much, Kelly. Take care of yourself. Bye now.
Bye.
Okay, back to just us. Let me just put that back into the screen. Okay, so we're starting to get comments in this. This is very exciting. It's the first time we've used a LinkedIn Live. So Graham's popped a question across. Can sole trader to limited company work if applicant only has 1 year's sole trader experience?
Yes, I'll jump in. So yes, as long as we've got the minimum 12 months that we need, then we would need to look at it on our specialist range. And again, we would need a projection. So with that, as long as the accountant has enough information to feel that they can give a projection, then we'd be happy. And we're probably very likely just to ask, what has that change meant for the business, so that the accountant can, confirm whether or not there's anything operationally that's going to change with that change.
And any shareholders and things like that.
Absolutely.
Okay. Absolutely. Love that. Okay. Keep your questions coming in, guys. I will see them. They do pop up and we will get to them. So do keep firing them into us. As I mentioned, we've got some frequently asked questions. So just for the sake of the audience, when after the live, if you go over to Saffron for Intermediaries website, on the front page, it's a link directly to the frequently asked questions for self-employed already available to you. But I'm going to fire through some. Lee, I wasn't joking when I said quick fire questions. There's quite a few of them, but they're all, I hope, answerable. Okay. But just so we've covered quite a few of them already, to be fair. Would you consider the most recent year's income when there's been an uplift in the most recent year? So if it's an uplifted last year, you would still use that, even though it's showing an increase in the growth?
Yeah, so it just depends on how much of an uplift would depend on which product would be most suitable. So if you've got something where it's been quite a steady uplift, then we can look at the most recent year based on our owner occupied standard range. If it's been quite a substantial increase, then that's where we need to be more flexible, and that's where we're very likely to want a projection and therefore use our self-employed specialist range. So again, if you've got a question on that, speak to your Saffron BDM. But we can look at the most recent year.
Okay. Tony, I'm going back to packaging the case again before I start quick firing more and more questions at Lee, because I've just realised we started but we didn't finish really. You mentioned the past, present, future, which I think is brilliantly, by the way, that's brilliant. That really shaped the way I think about it. What sort of other information do you need? What are we looking for? How can we package it in a way that you're almost able to go straight to underwriters? You're not going to be sort of backwards and forwards. Are there any tips, any advice, any sort of hand holding we can give to the brokers in the audience just to get them started?
So is that to me?
Sorry, Tony, that was to you.
Yeah. So, sorry, you slightly cut out. Well, it is. I think it's just Lee's talks about it. Thankfully, we've reduced our supporting document requirements, so we need 1 month's personal bank statements. So check the conduct. Is there anything on there that you go, ooh? And if you're going ooh, we'll go ooh. So if there's something on there that you're not sure there, get the answer for us. Let us know. Check the simple things like the accounts are in date. So our maximum is 18 months. So they've got to be no more than 18 months old at the point of application. If they're older than that, we can't use them. So that's a simple check. Again, I might be going on for other questions, but one of the other common things we get is looking at the duration of the accounts. So some businesses, the makeup of when they construct their accounts, they might be more than 12 months in longevity. For example, 15 months, say. So, and what we commonly see, and this is one that Lee spoke to me about, is that we'll see them put that 15 months of income in for 1 year of income. And actually it's not, because what we'll do is take that figure and divide it by 15 and then multiply it by 12 to get to the annual figure. So do that. Otherwise, you're going to be disappointed, because we're going to come back saying the max lend is lower than you think it is. So it's, and I think the key thing is, just do your due diligence, right? Do your due diligence. Do what you've earned the right to do as a qualified advisor, and just give advice. Do the right thing. One thing which is an interesting one is, and we don't help you with this because our portal doesn't ask you what they do. So it doesn't ask what the business does. But as we all know, some companies, the name of the company is by no means a descriptor of what they do, right? At all. I know I have my own limited company. You wouldn't have a clue what it did. To be fair, I didn't either. But then again, that's a different world. But I think the key is in the portal. If it's not obvious, just tell us what they do, because that really does help the underwriters when you're looking at income, particularly if they want to use a different way of calculating it to our standard, particularly that last year, and it explains the growth in it. So it's that kind of stuff. Anything else, Lee, that you can do? Yeah.
No, I think that when we're looking at our portal, I think the other thing is just label the documents. I mean, if the way that the documents are labeled really makes it easier. I know as a broker, if a customer sent me everything that I asked for, one, I'd probably be confused, because that very rarely happens. But if they then did it around the right way in terms of the documents and labeled it for me, I know that my life would be a lot easier and I'd be able to go back to them quicker. I think that from a lending point of view, any lender is going to be exactly the same. So if you can do that on every case, then it's very likely that you're going to be able to get those updates quicker.
Just going on the relationship with the underwriters and the BDMs and the conversations, Tony, you've done quite a lot to alter the relationship between your team and underwriters, and actually got your team more involved with underwriting in some respects, and more, at least more of an understanding of it. Maybe for the audience benefit, explain how that benefits them and their client. This working relationship that you've developed.
Yeah, I mean, first thing is, all my teams need to understand policy better than an underwriter. Okay, because that's our job to do that, because we can then spot when there's a healthy competition between underwriting if we don't agree with the decision. So it allows us to challenge. So that's one of the wins. And what you will find is we'll challenge declines before the broker knows it's being declined. And sometimes we can get it overturned without you guys even being involved. So that's a big plus. But we've worked hard with our underwriting team. And I think one of the things that we do every day is we have an underwriter surgery. So at 9:30, if the BDMs or the phone team or the intermediate support team have a case where we've gone, well, it's in policy, but it's a little bit outside, or we're not sure, we'll take that to the underwriter surgery and go, what do you think? So it's a pre-dip in effect. And then by 10 o'clock the next morning, we'll come back to you and go, there's the answer, either no or yes with caveat, etc. So that's one of the real relationships that we have. And that team has really worked together well to do that. I mean, it's best asking Lee from a user perspective. Lee's part of that, environment. So what do you think?
Oh, it makes a massive difference. I mean, I've been with Saffron for nearly a year now, and it's meant that from my understanding of the policy and where we can flex, actually speaking to the underwriter and actually working with them, it actually makes a huge difference. And every time you're interacting with a Saffron BDM, we are able, like Tony said, to speak to them, but equally we've already just gained all of that extra knowledge from the previous calls that we're on. So actually, there's a lot of the times that we'll be answering and we know where we can flex and we know how we can work with the underwriters. And because we work so closely with them, we can also then look at it in terms of adding notes onto the cases for you as well. So if you've got a case that is flexible, we've said that there's something we can consider, we've had that conversation with the underwriter, you won't feel like you've gone back to stage one. What you'll do is you'll be speaking to the BDM. The BDM will be putting notes on the case to make sure that the underwriter is aware that that is actually the case that we discussed as well. So and that makes a big difference. When I speak to the underwriters, and I feel like I get on really well with them. They might say something totally different, but yeah, I think from that point of view, that makes a big difference from their point of view. You know, as I was saying before, if you package in a case, great, it helps the underwriter, but equally, it's brilliant for us if we're then saying as a colleague, look, this is what we previously discussed. This is the case, and it just means that they're starting off at a quicker pace for you as well.
That's a really good point. That's a really, really good point. Right, we've got 15 minutes left. So if you've got any questions to put to Lee or Tony, please pop them in the chat on LinkedIn. It comes through to us here. We're not actually sitting on LinkedIn at the moment, so we do need you to put those comments in because we can't see anything else, as Graham did. Okay, Lee, here comes your quick fire questions.
Okay.
We're gonna, so for the sake of the brokers that are watching, this is available on demand from 12 o'clock. So as soon as we break from live, it's available to watch back again. So the reason I've left this for the last 15 minutes because it answers all the questions and things we've talked about before. So it's a nice little 15-minute snapshot to direct yourself when you want to watch it back on demand and answer all those questions. So Tony, if you want to chip in and help Lee out, so he doesn't have to do all of them, feel free. Obviously. Won't anyway, I know we've covered it before, but just to reaffirm, how long has the customer got to be self-employed to be considered with Saffron?
So 12 months, and long enough to have a projection from an accountant.
And really important thing there, from an accountant.
Yeah.
Will you use the projected income for someone with 1 year's trading?
Yeah, just to feel comfortable with the income moving forward. So we don't actually use it from an affordability point of view. It's more of us understanding from an underwriting point of view what it will be moving forward.
Thank you. As a sole trader, does my client have to use an accountant?
Well, no. No, as a sole trader, that they may do their own self-assessments, but if they've only got 1 year's trading and we need a projection, then we will need an accountant to do that projection. We are comfortable with an accountant coming in at that later stage to do a projection. But equally, if they've got 2 years and they're a sole trader and we don't need to use that specialism, then ultimately, no, we don't need them to have an accountant in that scenario.
Wonderful. How long has the customer got to be self-employed for to be considered on the owner-occupier or self-build propositions?
So 2 years now. Need 2 years full trading, 2 years accounts, and like Tony said, not older than 18 months in terms of the most recent year's accounts. So
just for my benefit, so you go self-build and owner-occupier. So literally across the range, 2 years is comfortable as long as they've got that 2 years of trading.
Yeah. We just treat 2 years as standard now.
Brilliant stuff. And that's really important for first-time buyers and self-build, particularly self-build. Obviously, I didn't realize you could be a first-time buyer, first-time builder, if you like, as well. So some of these things are really interesting. So, yeah, that's really nice to hear. What is the time length for the latest trading accounts to be accepted?
Oh, so they just need to be within the last 18 months to be accepted. Just to highlight, though, if you've got a first-time buyer, okay, they are actually eligible up to 90% on our specialist range. So if they've only been 1 year's trading and they're a first-time buyer, not first-time builder. So if they're a self-build 2 years, but if they're a first-time buyer, then we can look up to 90% on our specialist range.
Wow. There we go. I've got a question, Rahul. We're coming to you. Don't worry, we'll get to you. I'm just going to do this for quick fire and then we'll come off to the questions in. Anybody else got any questions, leave it in the comments. We're getting to those in just a second. Okay, we've answered this, but we will just go over it just for the people that are watching it back. If my client is changing from sole trader to limited company, do they have to wait 12 months before you consider them?
No. Do you want me to give you more than that? I can if you want.
No, I was waiting.
The short answer is no. I don't want to sound like a politician and give you a long answer every time, but yeah. So no. But I think the key thing there is we're just going to want to understand what's going to change with that business, with it changing. If it's purely just a wrapper's changed on the business ownership is still the same, then we're happy. If it's a case that there's been a change in the business operation, so more than one shareholder, income's changed, then you really need to pick up your BDM so that we can discuss through how we can help.
Brilliant. Will you consider the most recent year's income when there has been an uplift in the most recent year? We've covered that. Ignore that one. What will you use for income for a limited company shareholder?
Okay, so if they're 100% shareholder, and when I say they, I mean as in on the application. So you could have 2 applicants, 50% each. We treat them as 100% ownership of that business. Okay, so in that scenario, we would look at the profits after taxation and then add in the director's salaries. Okay, so 100%, that's what we're default to. If it's a case that they own more than 20%, then we treat them as self-employed, and less than 100%, so that sort of area, then we would then go with salary and dividends is standard. But if it's a case that they've got at least 50% ownership in the business, then we can look with underwriter's discretion to consider the share of the profits and their salary. So the share of their profits after the taxation, add in the salary, if it's a case that they haven't been taken out of the business. If they have been, then salary and dividends is going to do the job.
That's a really important point. So speak to your BDM, really, isn't it? Is speak to your BDM because the flexibility is there. 100%.
Absolutely.
Okay, just finish off last couple on this quick fire questions. How many business bank statements do you need for self-employed customers?
None. As standard.
About personal?
Oh, just one. Sorry, one month personal.
Sorry, I didn't add personal.
I was too excited about the fact that we don't ask for business bank statements, so I just stuck with that. So yeah, we don't ask for that as standard now.
Amazing. And last one, how do you consider income from a portfolio landlord business?
So we previously went up to 50%. Well, 50% was our standard in terms of buy-to-let income that we would use. We'd now use 90% of that income. And again, we'd want the accounts if it's a limited company. If it's a purely ownership, then we'd get the tax returns, and then we'd go off the land and property income.
That's the end of your quick fire questions. Well done, Lee. That was really good.
Congratulations, Lee.
On the ball there. That was superb.
I won.
you get a cupcake later. So
between the two of us, but he won. Yeah.
Right. So we've discussed some of the pitfalls, some of the issues. We've discussed some of the frequently asked questions and things that the brokers often want to know. So it's over to you, broker audience. Pop your questions in the chat, and we'll get to you in just a second. Before we do, Tony, we keep repeatedly saying like speak to BDM and all this kind of thing, but this is the reason we're doing this is to say, you know, we are flexible and use us for that benefit, as in use the expertise of your BDM and use that relationship. I mean, had Lee not gone out to Kelly's company, she may well have not known. So, you know, this is about a two-way relationship. It's about brokers learning from the lenders too, and actually approaching and saying, look, this is my case, you know, let's chat it through.
Exactly. It is. Look, it's all about what we do is very hard to write on a sourcing system or write an advert or whatever. So that's why I've invested in the team. You know, we've grown from a team of 2 when I got here in July 2020. We're now up to 14, you know, and that's because we need to be where you need us to be. We need to be providing the advice and support that you need to help your clients. So that's the key point for us. And it's just, I suppose it's another key thing is if you're not registered with us, get registered, because that's the one way that we can guarantee to keep you informed. Yeah, you'll definitely get our emails, and we're not spammers. We don't send out that many, but when we do, they're worth reading. But you'll also get a welcome call when you register from your BDM team. So all 4 regions have got a field-based and a telephony-based BDM. Okay. And they will very happily talk to you and find out about your business and find about how our products can help, because our policy is 5% black, 5% white, 90% grey, and that's where we operate. So if you've got a case which isn't black and white, then that's a big reason why you need to talk to us. You know, there's lots of people in that space, but don't rule us out because the black and white. Come and talk to us about the grey, because our underwriters have so much discretion and even exception to policy allowance as well, that it's always worth a phone call. And as you say, we can take it to that underwriter surgery the next morning if the BDMs aren't sure. But my guys are not shy at saying no. If it's not for us, it's not for us. We're not going to waste your time. We'll just say, no, it's not for us. But if we think it's got some legs, we'll find out and then let you know as quickly as we can.
Okay, perfect. Question on the screen for you guys now from Rahul. Realistic outlook on a sole trader operating for many years but is rebuilding credit score.
So, do you want me to jump in? Sorry.
You go.
Yeah,
No
okay.
worries.
So, we have a minimum credit score with Experian. I think we're one of the only lenders that are really transparent about the fact that we have a minimum credit score of 600. So actually, when you're saying a customer rebuilding their score, it could well be that in this scenario, they've got historic issues and that's obviously had an impact, but they've been able to have a score of over 600. So that's what we'd look for. First of all, score more than 600. And then that opens the door. If it's over 600, we'll then look at things like how many missed payments, default CCJs that they've had. And if there's CCJs, defaults have been settled for more than 2 years, then we can look to disregard them. So when you're saying rebuild, obviously depends on what period of time that's been rebuilding over, but it could well be that they're already in a position where we can look at helping them subject to that credit score and the historic data that they've got.
I hope that answered that, Rahul. If you need any more on that, Rahul, just pop it in the chat. Another question from them as well. What are the requirements for the specialist products? What's the difference for each product against standard products? Lee, Tony, whoever wants
I'll take this one and just see. So I think as Lee's explained, the real difference is years trading. Yeah, 12 months and enough to give us a projection is on the specialist self-employed. 2 months beyond it is on our standard. But as Lee said, if we've got somebody that's been trading for 2 years but wants to use that fluctuating income or that spike, then the underwriter will take a view and go, we'll do it, but actually it's going to be on our specialist product. So it is really case by case. Again, if you're not sure, speak to intermediary support team, speak to telephone BDM or speak to your field-based BDM.
I think that is a fair point. It's just chat, have those conversations, tell the story. Hey, Tony. Websites on the screen. saffronforintermediaries.co.uk. Click on the top right corner and register. Get yourself registered. As Tony said, you won't get spammed. You'll be looked after. And also you get that call. But also you get notifications on things like these SFI lives and the podcasts and other educational materials that they put together. So head on there if you haven't done already. That is obviously available from the page you're viewing this on. So yeah, just pop over to that website. Tony, I'm going to allow you to have a little bit of a rant because I know we haven't discussed it, but obviously affordability is a bit of an issue at the moment for across the board. We have behind me streaming on my television is the banks currently just talking to the government committee. We've had news today that inflation is likely to continue because wages have gone up again. So there's talk that the Bank of England put the rates up. Do you want to maybe just discuss what we discussed at the start of the last podcast? I think it was really important to get that across about this being cyclic and just maybe talking to the brokers about your experience, your lived experience. I'm not going to talk about age, but you know what I mean.
Well, it's obvious, isn't it? You know, this isn't my first rodeo, so we can get over that hurdle. Yeah, look, I think as I said on the podcast, I get a bit frustrated when sensationalist media talk about crisis and oh my God, XYZ, the rates are going up. This is a cycle. It is a cyclical thing, and it's just that we're coming into the one of the peak parts of a cycle, or I hope it's the peak, but who knows? But we're in a higher interest rate environment, which is unfortunate if you want to buy a house now, or you're due to remortgage, or your products up for maturity now. But everybody just needs to, in my view, just calm down a bit, because this is what happens, and in a few years' time, it will drop down. And then it'll go again. And it's the challenge is, it's what point do you join the cycle? Is it the top or the bottom? And both is not a great place to be, because one's going to go up at some point and one's going to go down or stay the same, hopefully. So it's just one of those. And I think Jane in our podcast said a great thing. You've got 1.8 million people coming off a fixed rate this year, right? Those are the ones that need to be worried right now. Everybody else is already on a fixed rate, because most of the market is fixed rate dominated. There are a few people on standard variables, and that is a challenge. But if you're on a fixed rate and it's not coming up to maturity this year, don't worry. Worry when it comes up. and your lender will be in touch with you and your broker will be in touch with you well before that to talk through your options. So I think my rant is, this is just, God, I sound like I'm going to hold up a line, the circle of life. Do you know what I mean? This is just what happens, and we've just got to all calm down. Now, there is a bigger crisis around people not having the money to feed their kids or clothe their kids or do all those things. And I think that's the crisis, and that's very real. But, you know, only 30 million householders in the UK actually have a mortgage, and only a proportion of those actually have a problem right now with a fixed rate maturing. So I think we just got to proportionalize it and stop the sensationalism, if that makes sense.
100%. I want you to have a chance to say that, because I think, you know, we talked about it in depth, and it gives me a good chance to promote that the Saffron, the podcast for SFI Not So Live is available on all your podcast channels. The last one, again, was a stonker. We've had some brilliant guests the last few months, and the last one was really, really good. Lots of opinions put forward, really educational for brokers. So do go and have a look at that. We've passed the hour. It's flown yet again. So quick reminder, saffronforintermediaries.co.uk. Go on there now. Frequently asked questions that I spat at Lee earlier. They're all available with the answers. There's loads of other bits of information on there as well. Go onto the contact page. The BDM finder's on there, so you can find out if Lee's your local BDM or if it's one of the others. And you can get directly in touch with Saffron. Look out for lots of material coming from Saffron and Self-Employed. I've seen loads of it already over LinkedIn and various other places. Keep an eye out for that. New podcast will be out on the 1st of August. So looking forward to that. Can't tell you who our guest is yet because we haven't confirmed. And we will be back right here on LinkedIn Live. Now we know it works. Would appreciate your feedback, though. So if you can leave comments to tell us it's worked okay, you've managed to view okay. And if you would like a CPT certificate, I hope you registered and gave you details. If not, if you can private message the Saffron for Intermediaries page with CPT certificate, we'll get it sent to you via direct message. So there's loads of ways you can get the certificates to you. But if you registered, I'll have your email and I'll get that over. So, Lee, well done on your first SFI Live.
Thanks, mate. Thank you. And
I really hope you'll come back and join us again. We haven't made you feel uncomfortable, I hope.
No, definitely not. I'll be ready for.
Yeah,
I was going to say, I'll make sure I've got my questions next time.
Yeah. No, we know you know your stuff. So thank you, Lee. And Tony, thank you, as always. We're back.
Thank you very much.
First Tuesday in August again. So we'll send some updates on that via LinkedIn very soon. But other than that, it's a goodbye from us.
Goodbye, everybody.
Thank you. Bye.